And this is as the spring housing season is ramping up. So let's check in on the state of the real estate market across the country. Since summer vacation hasn't started yet, we're not going to do a full road trip, just a day trip, people. We'll visit the DC metro area, and here to give us our tour is Corey Burr, Senior Vice President at TTR Sotheby's International Realty. Corey, welcome to you. Good to see you. Welcome.
Thank you, Kelly and Dom.
All right. So look, anecdotally, it seems still crazy out there. Open houses, Dom, correct me if is it just my area? 1 o'clock Saturday and Sundays, you see loads of cars. There's still tons of cash buyers in the market. There's no inventory. What do you see in Washington, D.C.?
So we're seeing still a pretty strong market. The market froze up as interest rates doubled at the end of last year. But in the last 75 days, this historic spring market has really kicked into gear. The real rubber on the road will be what happens at the second half of the year if the rates stay high and the CPI number doesn't moderate like it did last week.
So, Corey, I wonder, though, how much then can anybody at this point, real estate professional or otherwise, glean about this spring selling season? If there are this many externalities and abnormalities at play, can we trend-wise establish anything worthy about the data that we're seeing in the housing market right now?
Well, year in and year out, the time period from March 1st until the end of June is always good. Even in the worst markets, those are good months. As I said, the second half of the year is going to be all important because we're dealing with low inventory, but the rates are still very high. And to get sellers, as Diana just mentioned, to get sellers to sell to move to another property is problematic because they don't want to trade in their 3% mortgage for one that's now in the 5.5 to 5 3/4 range.
So, Corey, I won't get into the $40 million, what was it, $49 million for Daniel Snyder. I want to talk more, okay, the everyday stuff. There is a bifurcation taking place, you highlight, which I think is good to think about. Yes, a bunch of the houses are still going right away, 50% of them first 30 days on the market. But the ones that are sitting are starting to sit and starting to see price reductions, aren't they? How is that different from the market last year, the year before?
So we're getting a much wider experience on listings right now. Many properties are selling the first weekend with competitive bids and escalation clauses, but we're also seeing more and more properties sit on the market, ones that would have otherwise sold a year or two ago. And what's happening is that those are only going to sell with price reductions or seller concessions. And my impression is that having lived through the correction in 2008 and 1991 is that we're going to have more and more of those properties as we get through the next year or two.
And Corey, since you opened the door, so to speak, on this, is a 2008, 2009 type scenario coming for the housing market, not just in the D.C. metro area, but other markets around the country? There are some hot ones out there in places like Arizona and Florida that people are saying, hey, this could be something that's a real risk.
I don't see it. 2008 was a shock to our economy. You know, the CEOs of all of our major banks met at the Treasury Department to save the economy over one weekend. This is a much more normalized correction. It's exactly what the Fed set out to do a year and a half ago. And it's having its effect. And it's going to have more of a cumulative effect as we go further into 2023 and into next year.
And then finally, you know, days on the market, 9 average for March versus 20 Feb, 30 Jan. Some of that is seasonal, but you do have 20% more inventory than last year. So at what point, Corey, do you think we will not be talking about a pandemic, you know, goosed type of market? What point do you think we're going to normalize this fall, next year, a couple more years still?
I still think it's going to take some time for that existing demand from younger buyers to play out. You know, this younger group, we're told about 10 years ago that buying a house was a bum investment and not part of the American dream. But what we're seeing right now is they're just cascading into the marketplace. And as long as those families are being formed, I think there's going to be decent demand. And we have to hope that the inventory picks up because we don't want to squeeze all those new buyers out of the market.
Yeah, absolutely. Corey, thanks. The surprising resilience remains a theme. Corey Burr joining us on the D.C. housing market.